Stocks see a broad-based bounce with advances significantly outstripping declines. Utilities, industrials and financials are prominent gainers even as metals and IT drag.
Tata Motors arm JLR reports a 10% decline in wholesales during the quarter following disruption in aluminum supplies. The company expects a pickup in the second half, but analysts see challenges in China. The stock lower.
China's top economic planner in today's press meet only announces early use of bond money on projects, disappointing watchers who expected stimulus measures to boost consumption and research. Metal stocks bear the brunt.
Ola Electric has been served a show-cause notice by the Central Consumer Protection Authority from seeking a response in 15 days on the piling consumer complaints. The EV maker has been facing customer ire on poor service and problems with refunds.
The BJP leads in Haryana in a surprise development given expectations of an anti-incumbency wave, but J&K seems headed for an Iron India alliance win.
After a lot of days of decline and nervousness in the markets, we can say that there is some cheer. You're watching us here on Halftime Report. I'm Mangalam Malu, with me Ekta Batra. 100 points on the Nifty, 500 points for the Nifty Bank. The question is, where does it go from here? Is it just a bounce from oversold levels, or things have probably changed? We'll get to know about that in the next couple of days. A lot of cues lined up as well. But it's good to see some green on the screen, Ekta.
Hi, Mangalam. Yes, absolutely. And some kind of stability as well. So like you mentioned, the markets are in the green. We have the mid caps which are outperforming at this point in time. So the mid cap index is up around 1.2%. And it's heartening to see that advance decline ratio, which is favoring the advances at this point in time. So around 2,600 stocks advancing to around 1,300 stocks declining on the Bombay Stock Exchange. Just want to point out that while we are celebrating today, remember that month to date, both or rather the Nifty, Sensex and the mid-caps have lost over 3%. So let's see whether we manage to claw back in terms of gains. A lot of stocks in focus, a lot of stocks with strong volumes today include something like Tata Motors, which is on the back of news, Bajaj Finance, that stock is in focus, and Ola Electric as well is seeing a good amount of volume traction. Stocks at the best levels that we've seen in a year include something like Trent as well as Dr. Lal's, and stocks which are at the worst levels that we've seen in a year include something like Z Entertainment and RBL Bank. So it's a lively market both on the upside as well as in the downside. We have a lot of ground to cover, Mangalam.
We do have a lot of ground to cover. In fact, a lot of stocks passing around as well. You did briefly mention Trent. I'm looking at a couple of these Tata Group companies which are doing extremely well. Trent is up around 6%. But look at, something like a Tata Power, that's up around 3%. And Indian Hotels, that continues to surge. The travel theme that everyone's talking about, more so on the luxury end as we move into the third quarter, which is the strongest quarter for all the hotel companies. We're seeing some traction in the stock build up as well, up around 5%. After what was a soft first half of this year from a travel standpoint itself. So just keep an eye out on Indian Hotels. And Trent, the foray into lab-grown diamonds is something that the street is excited about. We'll talk about that in just a bit in more detail. But insurance business data for the month of September is in focus. Yash joins in with more on that. Yash.
Mangalam, it's been quite an interesting month. That is the month of September for general insurance companies. The players which were pacing ahead in the previous months have stopped and taking a breather, whereas the players which were not performing so well have seen a bounce back in the month of September. As far as the industry is concerned, that is the general insurance industry, the premium collection in the month of September has shrunk by about 7%. For the first half of FY25, the premium collection still remains with a growth of about 7%. Standalone health insurance companies, they've maintained their growth momentum. So the industry in the month of September growing at 26% in the first half, the growth stands at 25% in the premium collection. Now speaking about specific companies, ICICI Lombard, we've seen some good strong months coming so far, but September has taken a pause. September premium growing just by about 4% for ICICI Lombard. The first half premium collection still stands with a growth of about 16%. Market share growth in the first half on a year-on-year basis is up by about 68 basis points. New India Assurance, very weak growth so far, but the month of September has seen some amount of bounce. September premium growing at 9%. First half premium just with a growth of about 3%. Market share still remains in the first half with a downtake of about 49 basis points. Go Digit General Insurance, weak growth, premium growing just by about 5%. First half premium growing by about 12% and market share up by about 12 basis points. Now let's come to Star Health Insurance, because that's the sector, that is the standalone health insurance sector, which is seeing strong continued momentum. So Star Health has grown its premium in the month of September by 18%. First half premium stands with a growth of about 17%. First half market share amongst all general insurance companies for Star Health has grown by about 43 basis points. That stands at about 5.07%. Among standalone health insurance companies, still the market share is down by about 284 basis points at about 42.9%.
All right, Yash, thank you so much for that. That's about the insurance space. Meanwhile, we have a bunch of other stocks, Dixon Tech, India Mart, both of them up around 5% each as well. Generally, we have 3 stocks advancing for every stock that is declining. Important to see whether the market sustains closer to that 25,000 mark on the Nifty or not. But over the last few months, we've been talking about, weight loss drugs. Yesterday as well, Ekta was, briefly alluding to Ozempic on account of the Natco Pharma impact as well. So they've taken the world by storm, and the industry is expected to be about $100 billion industry by the end of this decade itself. But that's the global one. What about India, which is known as the diabetes capital of the world and is among the top 3 obese nations in the world as well? What's the opportunity? Ekta joins in with a quick snapshot. Ekta, everyone wants to lose weight, but how big is the opportunity here?
Well, yes, the size of the Indian anti-obesity market is small, but it's grown at a rapid pace, expanding 37% CAGR just in the past 5 years. Now, the entire market has grown from around 160 crores in August 2020 to over 560 crores as of August 2024. Though weight loss drugs have been around in the Indian market since almost 3 decades ago, with the molecule Orlistat launched all the way back in 1996, majority of the growth has been since 2022 when semaglutide was introduced in the market, with the market growing 46% in August 2022 over August 2021, followed by a 67% growth in 2023 and a 49% growth just in the past 1 year odd. So how has semaglutide led the growth, and how have other drugs in this category performed? Now, sales of semaglutide, which is the blockbuster GLP-1 drug, only the oral version is sold in India, which is branded as Rybelsus and sold by Novo Nordisk. It saw sales worth 56 crores in 2022 grow to over 200 crores by August 2023, and it went up to around 400 crores by August of 2024. Now, other molecules haven't been able to create the same magic as semaglutide. For example, dulaglutide, sold by the likes of Cipla and Lupin, the second largest drug after semaglutide in the Indian weight loss market, which saw maximum sales of 72 crores in the past 5 years and a 1% 5-year CAGR decline in sales. Or liraglutide, which is sold by the likes of Novo Nordisk and Glenmark, saw an 8% decline in sales on a 5-year CAGR basis, with a sharp 45% decline in sales in 2023. While Orlistat, which is sold by at least 20 pharma companies in the Indian market, saw maximum sales of around 64 crores in the past 5 years, which was around a 7% growth on a 5-year CAGR basis. Lastly, a few trends to watch out for. An incremental rise in semaglutide sales as physicians begin prescribing the drug for other conditions such as lowering risk of cardiovascular events, stroke, PCOS, amongst others. Sales are also expected to burgeon once the more popular injectable form is introduced in the Indian market. And the introduction of Eli Lilly's weight loss drugs, which is tirzepatide or Zepbound, which is giving stiff competition to Novo Nordisk's drugs globally. From an Indian company perspective, watch for the opportunity for the larger Indian companies to sign a licensing or marketing agreement with any of these global majors for the Indian market, and also introduce their own generic version in the Indian market, which is probably likely in just the next 2 years.
All right. Very interesting. I don't know whether it'll never be an OTC drug, will it?
No, never. I think, there's a lot of debate on how people are misusing it in real life as well. So that's a debate which needs to be looked at closely.
Take that point. The usage debate will be spoken about at a much later date. But for now, we'll talk about the business debate. On the other side, we'll have Vishal Manchanda of Systematics Group and Dr. Neeta Deshpande to discuss this rapid growth of weight loss drugs, what it means for patients, more importantly, what it means for investors as well.
Welcome back. Well, let's discuss a little more about the GLP-1 drug opportunity in India as well as in the global markets. We have Vishal Manchanda, who's a pharma analyst at Systematics Group, and Dr. Neeta Deshpande, who's a diabetologist and obesity physician, joining in to discuss the opportunity from GLP-1 drugs. Dr. Neeta as well as Vishal, welcome to the show. Well, Dr. Neeta, let's just start with you because there is a fear that semaglutide and other obesity drugs can also be misused. What has your experience been as of now when it comes to prescribing the drugs, and whether or not there is a fine line between overusing it and the actual utility of it?
Yeah, the utility is high, but there could be a very thin line, as you said very rightly. And there are people clamoring for the drug, and they are trying to get it in every which way that is possible. But however, the caution is that it is a drug that must be taken under supervision, because there are certain contraindications, there are certain warnings, and there are some people who should not take it. So there are several things like this, and that is the reason that it should not be available to all without a doctor's prescription who knows how obesity treatment works and who is well versed with this kind of treatment. So there is definitely a possibility of it being misused, because obesity rates are rising so high and everyone is looking for a quick fix, and they think that semaglutide is the quick fix. And therefore, we need to be really very careful about this.
All right. Point well taken, Dr. Deshpande. We must be very careful about it. Take it only under expert prescription and, with guidance from the doctors, etc. as well. But let's, bring Vishal into the discussion as well. Vishal, it's a growing market in India, but it's a very, very big market in the world already. Numbers talk about $100 billion opportunity. So from a business standpoint, which are the companies which are best placed to benefit from this wave, both in India and the ones who supply to the globe outside of India?
Right. So globally, if you look at things, it's about a $30-35 billion market, the GLP-1 drugs. So they address both diabetes and obesity. And they're also approved for other indications like chronic kidney disease, heart failure. So about $30-35 billion market, and that's growing top of 20% every year, and anticipated to be a $100 billion market by 2030. About 50 other drugs are in clinical trials. So we'll see more launches happening on this front. So globally, we'll see a very strong competition happening in this space. Number of players coming in. Maybe the prices would also come down because of competition increasing in the space. If you look at the India market, I think as of now, again, we have just the innovators playing in the India market. Eli Lilly and Novo Nordisk are the two players currently in the India market. So this India has a large scope, kind of currently just a 500 crore market, but probably a large part of the patients who take insulin can also take these GLP-1s along with their prescriptions. So if all of the insulin patients kind of also start taking GLP-1 as an add-on treatment, this market can explode to very large levels. While if you look at the players who are contending here are Dr. Reddy's and Natco, which are probably the front runners.
Okay. Give us a sense, Vishal, about Natco and the tie-up that they have with Mylan, and they did settle with Novo Nordisk. Mylan settled with Novo Nordisk. What does this mean in terms of a potential launch for Natco and potential numbers coming in from there?
So what Natco claims is they have a first to file exclusivity here. So they would qualify for 6 months exclusivity when they launch. They've not disclosed the timelines, but the last patent on semaglutide expires around 2030 to 2031. So that is when we expect Natco to launch. So what Natco can do with this drug, I think the opportunity is very large. It all depends on how much Natco can invest to create manufacturing capacities here. So I think the real constraint would be their ability to invest in creating manufacturing capacity for this opportunity. Capex is going to be humongous. I think these are peptide drugs and require large amount of investments.
Okay. All right. Well, Dr. Neeta, I just wanted to take that point forward. Are y'all actually prescribing these drugs for diabetes patients who are on insulin, and hence is that a market that one needs to probably consider?
Yes, definitely, because oral semaglutide, as it is marketed in India today and elsewhere in the world, is basically meant for and licensed for use for type 2 diabetes treatment. It also causes weight loss. It's not marketed as a weight loss drug yet. The weight loss drug that is there, that is the higher dose and the injectable form. Semaglutide, the oral form, is the first in class, a peptide in a pill for the first time. So that is in a dose that is meant for diabetes and not really for weight loss. The weight loss is not so high with the oral dose, which is meant for diabetes. We do prescribe it for diabetes, especially in those who are overweight. It does give good results. It is being used by many practitioners off-label for people even without diabetes, though it's not licensed for use. And the results are pretty okay. But the actual dose is 2.4 milligrams injectable, which we know as Wegovy, which is licensed for use by the Indian DCGI, but not yet available in India. So once that is available, that really is the obesity dose. But for type 2 diabetes, yes, we are prescribing Rybelsus, which is oral semaglutide, and we are getting weight losses as well.
Okay. So can you just tell us, doctor, I just wanted, it was a two-part question. When you're saying that you're prescribing it, say you have 10 patients with diabetes who are walking into your clinic, how many are you prescribing semaglutide to, which is the oral version? And when the injectable version, which is probably has more efficacy, is introduced in the Indian market, whenever that is, what do you think that will be in terms of, demand? If you could just give us a sense in terms of how many people are you prescribing it to when it comes to diabetes currently, the oral version, and what is the potential of the injectable once it's introduced?
Right. So cost is a factor at this point of time. And that is the reason that we may offer it actually out of 10 patients, we may offer it to even 6 patients, but then not all of them will take it up because of the cost. And that is about the oral semaglutide. So the need is there, the use is there, but the cost can be prohibitive at times because it has to be taken on a long-term basis. You asked me about the injectable semaglutide. Please remember that there is a distinction between Ozempic and Wegovy. Ozempic is the injectable equivalent of oral semaglutide, which is again meant for diabetes. Though it has become famous as a weight loss drug, the actual weight loss dose is Wegovy. It is also semaglutide. So you have Ozempic as the diabetes dose and Wegovy as the obesity dose. Once Wegovy comes in, I am pretty sure it's going to fly off the shelves because it gives much better weight loss than Ozempic as well as oral semaglutide. So the demand is going to be there. It's going to be huge.
All right, Dr. Deshpande, thank you so much for talking us through the dosage and the kind of demand that there could be for a drug like this, the patients that you prescribe this to. Just a final question to Vishal before we wrap up. You said that Dr. Reddy's and Natco are the front runners. Have you ascribed any sort of optionality in terms of a value to your overall metrics when it comes to semaglutide to any of these players? And what else are you waiting for before one actually looks at this as an inflection point to go ahead and buy that stock? Your top picks.
So I don't think we should go and buy these stocks right now. So as I said, while these are large opportunities themselves, but competition is something we'll need to be conscious about, because these are not drugs like the typical oral solid drugs, which can be manufactured and gained, and you can get approval for. The investments, it's actually much driven by the investment capacities that you have. And I don't think, so if you look at Novo Nordisk, they would have invested about $15 billion in capex over the last 3 years. And I believe large part of that capex has gone into creating capacities for semaglutide. So you can imagine the quantum of capex that is required here. So I think, and again, the cost of manufacturing will also be crucial. So how it pans out, we'll have to wait and see here.
All right, take that point. Thank you so much for joining in and giving us your view. We'll take a short break, come back on the other side. We'll focus full tilt on the market, a near 140-point gain on the Nifty. We'll get you what to expect from the F&O pack as well. back. You're watching us here on Halftime Report. The markets made a bit of a bounce back in today's trading session, so good time to get in the F&O perspective on the indices as well as individual stocks as well. From the indices standpoint, yes, there has been a bit of a bounce back, and it has been from, oversold levels as well. So if you look at it yesterday, the VIX went all the way up to 15, and now today, after that up move, we've seen a bit of a cool off in the India VIX as well. There was a bounce which was imminent also because the put call ratio had moved to 0.6, sub 0.6, which is typically a place where it bottoms out, and from there it's moved back to around 0.74. Not particularly overbought, but it has seen some bit of a relief rally itself. Whether this rally fizzles out or whether this sustains is something that we'll watch out for, given a couple of things. One, the fact that it's recovered a fair bit from yesterday's low, almost to 250 points, tells you that around 24,700 is an important support for the index. The second part is, though, about 25,050 is the first port of resistance which comes in. Why do I say that? Because we've seen some writing at the 24,900 put, but the 25,000 call writers are still pretty active in the market for a premium of almost 100 odd rupees. And secondly, you have the 50-day moving average as well, which is placed between 25,000 to 25,050 itself. So we have the 25,000 call writers active and the 25,042 mark, which has the 50-day moving average. For the Nifty bank as well, it's moved off the lows, but the 51,550 mark is an important one, which is the 50-day moving average. And the second half of trade, we also have the financial services expiry play out, for which the index is at 23,440. You have the 23,500 call and the 23,400 put, both of them extremely active. So no movement beyond this range is expected in the second half at least. So that's as far as the indices are concerned. We've seen a bit of a relief rally, but the question is whether this sustains or not. For it to sustain, we have to see it cross past that 50-day moving average on the frontline indices. On that note, we'll take a short break, but come back on the other side. An interesting discussion lined up for you on the stock of the last couple of days. It's Ola that we're talking about. Hormazdi Surabji of Autocar India and senior advocate HP Ranina joins in to discuss about the show cause notice to Ola Electric. Stay tuned. Welcome back. You're watching us here on CNBC-TV18's Halftime Report. Pull up the intraday chart of Ola Electric. There has been a bit of a recovery from the lows, but remember the stock was down about 8% in yesterday's trading session as well. And this, as the Central Consumer Protection Authority has issued a show cause notice to Ola Electric following a wave of over 10,000 complaints received on the National Consumer Helpline. To discuss this, we have with us Hormazdi Surabji, who is the editor, Autocar India, and HP Ranina, who is the senior advocate at Supreme Court itself. Thanks a lot, gentlemen, for joining in. Hormaz, I'll come to you first. On the product, what do you think this conversation around Ola Electric, its services, the quality, etc., would do to the market? Because up until now, it has been the market leader with a high amount of market share. But you also have some more traditional players coming into electric vehicles. Amidst all of this, what does this do to the product itself?
Well, I think, honestly, it's a story of arrogance and ignorance, to be very frank. I mean, the arrogance Bhavish Agarwal has had. We've seen the way he kind of engages on Twitter. I've also engaged with him on one occasion. Clearly, I think, what's very clear, he doesn't understand the auto business as well as he should. He thinks everything can be done overnight. Obviously, shows in product quality. I think he doesn't seem to care about service or the customer. It's all about the valuation, trying to, I would say, and honestly, the investors are responsible for creating what I would call this situation where, he's from confidence has gone to arrogance because obviously there's a lot of money behind this. He's actually bought market share. If you look at it, we know it's not a very profitable company. The product itself, the S1 Pro, I have to say it's a good product as far as spec goes, but that's just not enough. And going forward, I really don't see a fresh line of products coming out either. So I think service is one thing he has to nail first. A lot of consumers are upset. Consumers is what makes or breaks a product and a brand.
Okay, Hormuz, it'll be interesting to get your thoughts on how he could recover from this or what the strategy would be that you would probably recommend. But before that, I just want to get Mr. Ranina into this conversation. So, they've received that show cause notice from the Central Consumer Protection Authority, and the notice alleges violations related to consumer rights, misleading advertisements, unfair trade practices. Give us a sense in terms of, how serious this show cause notice is in the larger scheme of things for Ola.
Well, a show cause notice is generally issued in conformity with the legal principle that you must give an opportunity of being heard before you take any action against the party. So Ola will now have to give its reply to the show cause notice and justify whatever stand it has to take and meet with the problems which are pointed out by the consumers. The consumers are certainly aggrieved if there are more than 10,000 or 1 lakh complaints, as you pointed out, then there is certainly some truth in that statement. Therefore, they have to show that the complaints made against Ola are not justified. And the ball is entirely in the court of Ola now to prove that their product is of good quality, their services, what was expected of them to give, and they are up to the agreement which they've entered into while delivering the product. So this is the first step, that the commission will then go into the issues, give a hearing to both parties, and then give a final order.
Right. We understand that. Mr. Arena, just a follow-up on that would be, as Horma said, that it's a reputational damage to the company because a lot of people are complaining. Secondly, on social media as well, there has been a fair amount of furor around it, and that's reflected in the stock price move in yesterday's trading session as well. From a purely legal standpoint, how much of that do you think will weigh in on the concerns around product quality and consumer complaints?
Well,
I think we've lost you there. We just try and fix that audio. Mr. Ranina, I think you've muted yourself.
Okay, maybe we can just get back to Mr. Ranina in a bit. But Hormuz, if you could just come in on this, this problem seems to be mounting. 10,000 complaints which have come in. So the key question is, how does one claw out of this problem now? What would the recommendation, or what do you think would happen, considering that you've looked at the auto space for so long, and this is a product that you're dealing with where there are multiple consumer complaints? So obviously sales are going to be questioned here on.
Well, simple answer, but I don't think it's possible to do. Change the CEO. I think that really is the root of the problem, to be honest, because I think, there is an absolute, disregard for service issues. And don't forget, EVs generally, it's not just it's across the board. Right now, the EV industry is grappling with a lot of what we call software issues, as EVs are moving towards what are software-defined vehicles. Software is really where the challenge is. You've got so much software and each one has to talk to each other. It's very, very difficult to do that. So I think, you've really got to focus on the quality side of it. You've got to understand that, things need time, they need validation. There's a life cycle, there's a kind of a process that products have to go through. All mature OEMs do this. That's why what you're seeing is Bajaj and TVS really chipping away at this huge start Ola had, because obviously, they've just been playing a slightly wait and watch game. And now they're confident of their products. And I think I won't be surprised if they soon overtake Ola as well.
All right, we'll get back to Mr. Rania in just a bit. We've got his audio fixed, but just a quick follow-up on this. Hormaz, Ola Electric, do you think it's an Ola Electric problem itself, or from a consumer standpoint, do you think it's a problem for all the electric vehicle two-wheelers? Because on the one hand, there is always this sort of range anxiety, uncertainty around buying an e-vehicle. And then you have problems around, so many consumer complaints coming in, and this against a supposed leader out here. So does this, make people take a step back and back just the traditional ICE two-wheelers?
Well, I think obviously service issues will cause a loss of confidence. But quite frankly, we've got other products like Ather. They do a really good job. We've ridden all these bikes, very well sorted. You speak to the promoters, you've got someone who's very kind of pragmatic, practical, gives you a lot of confidence. And that, obviously they're much smaller, not as well funded. Clearly, Ola has done a fantastic job of, let's say, raising the required investment and obviously thinking on a certain vision and scale. But clearly that has come at the cost of quality, as I said earlier. So software is a challenge. It's not that it's, kind of insurmountable. Everyone has it, but there are ways to kind of, let's say, validate product development going forward. And I think that's what needs to be looked at a lot more critically.
Okay. Mr. Ranina, I just wanted your thoughts in terms of how this show cause notice can probably escalate, according to you. As of now, the company has said that it does not impact their financial or operational activities as of now, and it does not include any penalties or financial fines either. So this seems to be a little, a little blunt in terms of what it could do legally. But is there any way that it could escalate and something that maybe people need to watch for?
Because once the show cause notice is given, then Ola will have to reply. To that reply, the consumers will give a counter reply. So all the dirty linen will come out in public. Whatever the issues involved will come out, and therefore it's going to certainly escalate. And thereafter, the commission will give its final finding and report. And that itself could be the nail in the coffin of Ola, in case they uphold the objections raised by the consumers. It will certainly affect them. It's going to escalate. This is only the beginning.
Any examples you can share with us in terms of what's happened in the past, just to give us a sense in terms of what the extent could be?
The extent would be that the issues will come out in the public domain, and certainly it will affect their share price because people will know that there is something in it. Damages are going to be raised at present. Obviously, there can be no damages because they are still being given an opportunity of being heard. But subsequently, if things are correct, if the consumers are right, if products are not up to the mark, if the service is poor, if the agreements are violated, then heavy penalties will be levied. As you know, in many cases of SEBI, for example, SEBI has levied penalty for various people, and that has affected the stock price.
All right, take that point. Thank you so much, Mr. Ranina, for giving us the legal view, and Hormas for giving us the view of the consumer, the auto expert as well, what happens to the product. His three-word solution for the problems right now is change the CEO. Of course, we'll see more of the developments as they happen from now. But for now, it's an interesting, important consumer issue for those who've put in their hard-earned money to buy a product which is promised to be good, and they do not expect any sort of problems out here. But now that the problems have happened, maybe the company could go ahead and service them well as well. Complaints are mounting. Thanks a lot. We will obviously dial back once there are more developments on this issue itself. With that, it's time now to take a short break. But as we do that, in case you missed this exciting conversation that we had with Mr. Ranina and Hormas Sorabji and many such other conversations, then what you can do is just use your phone, because all the news and business updates is just a click away. This is the all-new app of CNBC-TV18, from which you get instant access to breaking news, in-depth articles, a lot of discussions that we have on the channel as well, and all the financial world updates at your fingertips. All you got to do is go to the App Store, or if you're using an Android phone, go to the Google Play Store and download the CNBC-TV18 app. Stay with us.
Welcome back. Well, moving on, the jury for the 20th edition of the India Business Leader Awards met in Mumbai last evening. The 11-member jury was led by Bharat Forge's chairman, Baba Kalyani. They picked the winners for a variety of categories covering business, public service, sports and entertainment. The winners will be announced on the 7th of December. The jury held a robust discussion on each category in a meeting that lasted nearly 3 hours. CNBC-TV18 Shireen Ban sat down with the jury members after their deliberation to discuss the growth prescription for India over the next 25 years. When asked what India needs to do over the next quarter of a century to become a developed economy, the jury came up with several interesting ideas. Listen in.
Manufacturing sector coming anywhere between 20 to 25% of the economy. You're looking at a manufacturing sector which is going to be 10x of what it is today. And we are already beginning to feel the surge although there are a lot of, let's say, headwinds in terms of the geopolitical tensions that are taking place, the entire Middle East war, the non-ending Russia-Ukraine war, and of course the new China versus the rest of the world campaign that has started. But this puts India in a very good spot. If we can get things right in the next 5 to 7 years, nobody is going to stop India.
For India to be competitive, it's very important that the infrastructure is built in a competitive fashion. When I talk about competitiveness, it's not the lowest costing infrastructure, but the quality of the infrastructure, the life cycle cost of infrastructure has to be kept in view. I don't think as a country we have yet given enough importance to quality. So I think what we need to focus on is good quality in good time.
All right, with that, we'll step into a short break. As we do that, on the other side, we'll get you a conversation that we had with Mohit Goel, who's the MD, Omax Group, on their business outlook. Stay tuned.
Welcome back. Well, as we wrap up the show, let's get in some perspective. Omax Group says that they plan to invest around 10,000 crores over the next 2 to 3 years. The group's MD, Mohit Goel, in conversation with our colleague Timsi Jaipuria, spoke at length on the company's growth outlook and added that the group is targeting sales worth 5,000 crores from their upcoming launches in this financial year. Listen in and we'll be back with Business Lunch.
So we're looking to invest around 2,500 crores in residential and 1,000 crores in commercial. So we were predominantly a residential player, but because of the trends and everything, we started concentrating on commercial further.
What is the order book looking like? What is the sales target for this year in both the segments?
So the order book is like 9,000 crores and the sales target for this year is going to be around 5,000 crores. This is the pre-sales I'm talking about.
Any breakup that you can share for residential and commercial?
I think around the same ratio which I just mentioned, 30% is going to be residential and 70% commercial.
What is the current debt situation like? Any plans to reduce it further?
We're standing at 462 crores debt levels, consolidated, and looking to, I think we're going to maintain it around this level only, and there's a possibility we might kind of go net debt-free in this by end of this financial year.
Okay. And what are your upcoming launches and how much of sales are you targeting from them?
As I mentioned, so it's going to be 9,000 crores is the upcoming launches, and out of which we are targeting 5,000 crores of sales.
In this financial year itself?
Yes, absolutely.
What are the planned investments and expansions across Delhi, Faridabad, UP, Haryana and Punjab for the next year? Because that's the belt that you have your expertise in.
So I'll not be able to give you exact number for the next year, but in the next coming 2-3 years, we are investing around 10,000 crores. And the breakup is like Delhi, we'll be investing 2,500 crores, Faridabad, 2,200 crores. We have a project in Ludhiana. I think we're looking at investing 1,400 crores. In Chandigarh, 1,000 crores, and in UP, it is around 2,500 crores again. In MP, it's 250 crores, and that's about it. I think if you add all of these, we'll be investing around 10,000 crores in the next 2-3 years.
Okay. Also, how do you foresee these investments shaping in Omax's financial growth and market position over the next few years? Because 10,000 crore worth of investments in the next 2 to 3 years across several major markets in North India, as you just mentioned.
I kind of see our top line to grow by 25 to 30% year on year, and I see the bottom line to get better in the next couple of years as a lot of projects are getting delivered, and it's going to be, you will see those numbers coming in on the bottom line. So I think it's going to grow by same 20 to 30% as well year on year for the next 2-3 years.
Okay, could you also share details of the projects such as which Omax has launched in the last year? What is the total investment? What kind of revenues they have generated or are projected to generate?
So we launched projects all across all these geographies which you just mentioned, and as I said, the revenue potential of all these launches is around 12 to 15,000 crores, out of which we are targeting to achieve our pre-sale number of 5,000 crores.
My last question to you, we understand that recently SAT has stayed the order of SEBI, which had restricted Omax and its directors from raising capital from capital market, securities market, etc. What are the plans now? How are you going to proceed on it? Are you looking at raising some fresh funds from the markets?
Very thankful to SAT to do this and to listen to our side of things as well. So it's good for the company, but we are actually not looking to raise any funds from the market or anywhere else. So we are kind of very happy with working with our internal accruals.